Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com. Welcome to the first day of summer and Friday's relaxed morning call. So it looks like the market is actually a little bit more relaxed. We've had a 2-day pounding in the world markets, pretty extreme. Okay, not, I would say, excessive fear, but enough to, rattle a little bit of the investor's psyche out there if they weren't ready for it. Some attribute it to, Big Ben's testimony that they're going to take away the punch bowl a little sooner than people thought. Some are attributing it to the credit crunch in China. Or, if you're a technician like me that doesn't need to attribute it to certain headlines, except for the fact that, we're almost half a year into 2013. The S&P was up as high as almost 17%. So a technical corrective phase was long overdue. And thank goodness we had some signs that actually showed us that this was coming. If you take a look at the chart of the SPX, you will see first sign was right here, your outside day on May 22nd. Okay, here was your first test of the 50-day, a little bit of a bounce. Second test of the 50-day, a bounce that took you through that trend line. Then what happened? We reversed it on Big Ben's testimony. That was your second bearish signal versus this. And then yesterday, boom, slicing through a trend line that's been in place since November. And this, I would say, is not really the macro trend line. This is just the most recent, rally that's been intact. So with that said, today the futures are up a little bit. Okay, I think it would have been better to have a gap down to just say the 100-day, because then I think some of us would have been, buying the spiders or the diamonds or the Qs for some kind of relief rally, perhaps back to retest some resistance. But I think the futures are already off a little bit more than they were this morning. So what I was thinking about doing is I was going to put a chart and say, okay, this is your potential spots, spots for a bounce back. The first spot would be a retest of the 1598 June 6th reactionary low. Okay, so from where we were, on Wednesday all the way to here, this would be considered a pretty feeble bounce. This would be, something that would be tradable. Okay, and that would be resistance 1. Resistance 2, in my opinion, would be right around here, which was the other reactionary low. This one was around 1608. So this really is, in my opinion, would have been the first zone. So if you were looking to re-short, that would be a spot. Or this would be a spot that if, the bears want to stay in control from this big 2-day break, this would be a spot they'd want to contain. Okay, you also then have the 50-day, which right now is right around, is it 1618? Yeah, on this chart it is, yes. So that would be that spot. Okay, so with that said, this would be resistance area 1. This would be the retest. And then if they wanted to push the envelope, maybe they go a little bit higher to try and fill this gap, because there's still, if you want to do, retracement rules, which some people do also, where you go from, the high all the way down to the low, which was yesterday, you can get, retracement levels like this with the fibs, where this would be your 25% retracement, which would be considered, a weaker bounce that the bears would want to contain. This would be 0.38, would still be considered, the downside in control back to here. And then right around this 1635, this was when people would be starting to think neutral again. And I think at that point, you'd have a pretty hefty pain trade going on, for people who've been trying to short the bounce. So with that said, I do think that, enough in our community or enough on the, Twitter feed that follow us closely know that, the time to have taken off some risk, is somewhat behind us. Some people even on Wednesday got short, or even yesterday. Remember, we talked about how the S&P stayed below the 50-day for like 60 minutes, and then you still could have got short there after the gap down for another 2.5 points in the spiders, or 25 handles or so in the S&P. And then we were trying to figure out what to do last night, for some cash flow tactical trade. And I'm like, you know what? after 60 handles to the downside, I don't think you go home short, even though you can get a little bit more follow through. But the same way, on such a drastic down day, just in case there's some kind of black swan event or or whatever, it's probably not the most conducive thing to go home long. So if you are flat the way I am in my trading accounts, you know what? You get today to figure it out. And again, it's not the exact setup we want because, again, futures are up 8 to 10 handles. I don't think there's that much more room to the upside. So you don't want to start shorting a bounce too early. The same way, you don't want to, if there's not a lot of room there, you don't want to get too chopped up. And another thing we have today is quad witching. Quad witching is always a little bit difficult because there are forces at will that want to push things around to some heavily populated strike prices. So that could skew what's going on at times and get some erratic movement, which traders don't like erratic movement. So all in all, with this up open, after the 2 pretty much calculated days, I think this is a noisy day that you just don't want to be too active with. I'm going to be in for the first hour or so to figure out if there's any tactical cash flow moves. I'm really not interested in putting in on any swing trades yet. I personally think at some point, if you go back to this chart, that in July we will get a move to at least 100-day, maybe even down to this key support from April, which was right around 1536. So I'm going to tactically take trades until then. Maybe buy little micro dips, and then also sell some rallies and look to see if there's relative weakness, and then see as if we move lower, where the groups that are having relative strength. Because if you think about it too, next week is the end of June. So what happens typically at the end of a month? People want to get paid, they want to show performance, so sometimes you get a little bit of a markup. Same thing at the end of the quarter, end of the second quarter, which is an important quarter. So that too could, cause a little bit of a choppy bounce that's going to be hard to play. So with that said, I think that net short could be the way to be, but it might not be over the next week or so. So take trades both ways. I wouldn't expect much. If something happens, unexpectedly and a great trade develops, go with it. But at this particular point, I would definitely do a little less the next few days. Let's see what type of bounce we have and whether it's reshortable or, see if there are, some spots to play for, for tactical longs. But all in all, I think that this type of environment is going to continue. I don't think the volatility is going to be like we saw the past 2 days, but, I would say there will be opportunity. And if you did have a great week or so and this and that, and you want to take off, today is the longest day of the year. That means whatever you do, you could do it a little bit longer today. So enjoy yourself and enjoy the weekend. Have a great day. Scott Redler, T3 Live, the morning call. You'll see John Darcy at the recap.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.